Hey friends, welcome to the Alex Trade channel. Today we're going to talk about one of the most important tools in technical analysis, support and resistance levels. If you've heard about them but still don't quite understand how to correctly identify and use them, this video is for you. We'll break down why these levels are so significant, how to find them on any chart, from currencies and stocks to cryptocurrencies, and what trading strategies allow you to get the most out of them. Maximize your benefits. Ready to figure it out? It's all up to you whether you'll just watch or start making money. In my Telegram channel you will find strategies, tips, and case studies that will help you reach a new level. And I also have a free gift for you. Just message me privately and I'll tell you how to get it. Subscribe to YouTube, give a thumbs up, and start taking action today. All the links are in the description, and as usual, we'll start with trading. Let's go! We're starting trading with the Australian dollar and Japanese yen currency pair. We're marking the resistance, levels, and getting ready for a breakout. Don't forget to also plot the trend line on the chart to make sure it really reflects the trend. A strong trend that could soon be broken by the price. In addition, it's worth marking a level just below that we've already surpassed. There you can see a small local trend that we'll be working from. As you can see, the price is already pushing up against the resistance level and getting ready to break through it. Let's head over to the trading terminal and open a position to buy with a volume of $500. To start off, let's define what support and resistance levels are. Support is a price level where buyers become active enough to prevent the price from falling below a certain point. Simply put, it's the floor that the price often bounces off of upwards. Resistance, on the other hand, is the ceiling, where prices hit a wall, and the price can't break above it without some serious effort. Why does this work? Imagine you have a large number of traders who want to buy an asset at a certain price, thinking it's a good deal. When the price drops to that point, they start buying actively, and the decline slows down or even stops. Similarly with resistance, that's where the big sellers are sitting, not wanting to let the price go higher. As a result, the resistance level often becomes a zone of mass selling. It's important to remember that support and resistance aren't just clear-cut lines on the chart, but also in whole zones where a real battle is unfolding between the bulls and the bears. Support and resistance levels aren't magic or a figment of imagination, they're a reflection of real market sentiment. When the price bounces off the same point several times, traders remember that level. Oh, the price turned around here last time, so it might do it again. As a result, more and more market participants are paying attention to these levels, and they kind of become self-fulfilling. Meanwhile, our previous trade closed with a profit of $450. As you can see, the price has confidently gone up and continues to build on its upward movement. Overall, the market picture has not undergone any significant changes. We've slightly updated the local highs, and judging by the current dynamics, there's every reason to believe that the growth has continued. So, we're heading back to the trading terminal, picking the same trading volume, and opening another long position, hoping for further price strengthening. Support and resistance levels can be roughly divided into several types. First, horizontal levels. The most classic and straightforward. That's when the price repeatedly touches the same price range and bounces back. The easiest way to find them is if you see several lows, or highs on the chart that are roughly at the same level. Second, sloped levels. An ascending trend line that supports the price from below can act as support, while a descending trend line pressing down from above acts as resistance. The role of resistance. It's important to connect consecutive extremes correctly here, so that the line is respected enough by the market. Third, dynamic levels in corridors or channels. The price can move within a channel where the upper boundary acts as resistance and the lower boundary acts as support. These levels kind of move along with the trend. Fourth, psychological or round levels. Example, a round price like $1.50 for the euro against the US dollar, or $100,000 for Bitcoin. Such values often attract attention, and large orders can accumulate there. As the market approaches these numbers, it often slows down or shows increased volatility. Fifth, intraday levels. These are shorter intraday levels that are important for scalpers and day traders. They can form literally within a couple of hours, but they can act as support and resistance all day. All these varieties need to be recognized on charts and combined with each other to obtain a more accurate picture. After all, there are no magic buttons in trading, there is knowledge that produces results. I share them on my Telegram channel so you can earn and grow. And to make your start even easier, I have a free gift. Just message me directly, subscribe to my YouTube, hit like, and take a step towards financial freedom. All the links are in the description. After a small correction, our trade closes in the green and we make another $450 in pure profit. A great result. As you can see, the price has managed to rise significantly during this time. Now it has come close to the previous highs, where an important level coincides with a round number. Additionally, the chosen indicator is already signaling overbought conditions, which could indicate an upcoming market reversal. Let's try to take advantage of this opportunity and play against the trend, hoping for a short correction downwards. Let's head over to the trading terminal and open a short position for $500. If our hypothesis turns out to be correct, we'll be able to make another profit from the pullback prices from a strong resistance level. To learn how to quickly and accurately find support and resistance levels, follow a few simple steps. First, switch the chart to a higher time frame, like daily or 4-hour. On larger time frames, key levels look clearer, and the small noise doesn't distract you. Second, look for clearly defined extremes, historical lows and highs, and trend reversal points. Mark these areas with horizontal lines or rectangles to highlight not just a single point, but an entire range. 3. Take a look at the cluster of candles. If the price has been stuck in the same range for a long time, that's where a strong level might be forming. 4. Look from left to right. Levels that were established a long time ago can still be relevant even after several months. Price loves to return to already tested zones. 5. Don't forget about previous resistances that can turn into support. And conversely, when the price breaks through a strong level from the bottom up or from the top down, the role of that level can change. It's important to practice. Take historical charts and mark the moments. Where did the price bounce off a certain line? Over time, your trained eye will help you find these points almost intuitively. Our position, fortunately, also closed with a profit, and we locked in another $415 in profit. Despite the uncertain situation, we took our profit. The price still managed to rise a little, and after touching the level, it went into correction. I think we've played our opportunity on this currency pair. And the further movement might be a bit unpredictable, so I suggest we switch to another currency pair, the Canadian dollar to the Swiss franc, and work here instead. On the new chart, the support and resistance levels are clearly visible. The price is moving in a sideways channel and is positioned roughly in the middle of this range. Analyzing the situation, we can notice that a kind of triangle has formed, and the figure is almost symmetrical, which indicates a possible breakthrough in any direction. However, considering the recent upward momentum and the fact that the market often gives corrections within this corridor, let's try to take a short position and profit from the expected price pullback. Let's head to the trading terminal and open a short position with the same volume. One of the toughest situations for beginners is false breakouts. It seems like the price has pierced a strong level of resistance or support, everyone is geared up for the continuation of the movement, and then suddenly the market turns around in the opposite direction. Why does this happen? 1. Manipulations by major players. Big capital can shake out stop losses, making many believe in a breakout. After the big positions and small traders have exited the market, the price comes back. 2. Low volatility. In a sluggish market, even a small spike in activity can temporarily break through a level, but without real volume confirmation. 3. Emotional entries by traders. Having seen the breakout, many traders enter into position at market price, raising the price a little higher or lower, but if there are not enough serious buyers or sellers, the impulse fades and the chart returns to the previous corridor. To avoid getting trapped by a false breakout, it is useful to wait. Price consolidation at a level, for example, a candle closing above or below the level, increased volume, or a retest from the opposite side. Even knowing all the theory about support and resistance, traders still make mistakes. Here are some of them. First, too many levels. By trying to draw all possible lines, a trader clutters the chart and misses the main movement. It's better to highlight 2 or 3 truly important levels than to spread yourself thin over a dozen. Second, incorrect time frame. A level that is clearly visible on a monthly chart may not work on minute trades, and vice versa. Choose key time frames that fit your trading style. 3. Ignoring the fundamental background. Strong news or company reports can break through any level. The price can soar without paying attention to technical signals. 4. Hasty conclusions. A breakout of the level is not yet a reason to panic or immediately enter into a trade. Wait at least a couple of candles, analyze the volumes, and only then make your decision. Meanwhile, our last trade also closed in profit, and we recorded $350 in net income. The situation, I admit, was, again, ambiguous, and it seems to me that in many ways we were simply lucky. The market managed to sharply throw up the price before it went in the opposite direction. I do not recommend entering a position in such sawing movements, so we will try to act more carefully in the future. I also noticed that in this zone we have an interesting round number that a lot of people like, because of the nice view. It's not uncommon for large orders left by other traders to accumulate in such areas. Now let's move on to a new currency pair, the Swiss franc to the Japanese yen. We can see that a very strong upward trend is forming here, which has already come close to the previous high and is even starting to break through it gradually. We mark all the levels on the chart that could potentially influence the further movement, so we clearly understand where bounces or breakouts might happen. The trend is quite strong and has been going on for several hours, so in my opinion, a further breakout above the upper level could happen almost immediately. Additionally, a small consolidation range has formed on the price chart. Another sign that we might be in for a sharp breakout. Personally, I'm counting on the upward trend to continue. Switching to the trading terminal, I noticed that the price has pulled back significantly, and this gives us a great opportunity to enter at a better price. So, I decide to open a new buy trade with a volume of $500 to try and catch a further upward move and lock in some extra profit. Support and resistance levels really are the foundation of technical analysis. By studying them, we obtain the key to understanding where exactly in the market demand or supply may be activated, what are the potential targets for a transaction, where should risks be limited. But remember, the market always remains unpredictable. Even the strongest levels can be broken, and a false breakout can easily confuse beginners. Once you learn to confidently identify important zones on the chart, you'll notice that the accuracy of your trade entries will significantly improve. In addition, studying fundamental facts alongside technical analysis of levels can create a more complete picture of market sentiment. Don't forget to regularly review and adjust these levels, as the market situation can change very quickly. If you can't draw levels yourself, you can use ready-made tools or services, but it's better to master this skill manually to better understand the logic behind price movements. And of course, try to control your emotions and stick to your discipline. Even well-defined levels don't provide a 100% guarantee of success. The key is to learn how to combine levels with other indicators. For example, candlestick patterns, indicators, and volume analysis. And always have a clear trading plan. Then, support and resistance levels will become not just lines on the chart, but real landmarks that help us make informed decisions. Our last trade also closed in the green, and we locked in a profit of $365. Everything turned out just great. The entry was chosen almost perfectly, and we got a great profit, even though the price didn't show a sharp upward impulse. There's a chance that with further observation, we'll see another high being set before the market corrects. Guys, we had a really successful trading day today and made a total profit of $2,000. This is an excellent result that clearly shows how important it is to closely monitor market situations and make timely decisions. It doesn't matter where you start, what matters is where you're going. If you want to master trading and start making money, subscribe to my Telegram channel. There, you'll find everything you need for growth and success. And I also have a free gift for anyone who sends me a direct message. Links are in the description. Thanks for watching this video all the way to the end. Hit like if you found it helpful, and be sure to share your thoughts and questions in the comments. Wishing you success in trading and see you next time on our channel.